Capital and Counties Properties, or Capco, is a London property company with two key assets focused on Earls Court and Covent Garden.
Right, so this is the other half of the old Liberty International, and those two flagship properties are in central London, and they're tremendous properties with lots of heritage, but
if
also
it's a location, then
wonderful
this one's
tenants,
in the same,
Apple
in the right
stores,
place.
flagship type destination stores in central London.
Market cap 65.5 billion rand and a historic yield, as Paul's already explained. Why are we putting this number up at 0.44%? Does this story differ, or is this online retailing trend a key threat across the board?
Not so much for Capital and Counties. You can see from that yield, very, very low. It's not really a yield play, it's more development property investment thesis. And specifically, Covent Garden has been a great asset. In the middle of London, very high-end luxury stores, almost like the Melrose Arch of London, if you want to call it that. I'm sure it's actually
almost
a bit more than
almost
that.
A tourist,
Flattering to Melrose
Arch, yes.
Almost a tourist attraction in the London context.
Correct, and it is the majority of the portfolio, 2/3, while the Earls Court development is a big mixed-use development where the focus has been on the retail side, which has been a bit slow, the Lillie Square development. So a lot of concern regarding the fact that all the Asian and Middle Eastern investors from petrodollars and Chinese excess wealth not finding their way into central London in the last few months. And therefore the sales of Lillie Square really not taking off, and a lot of concern. But that concern in my mind has been extrapolated a bit too far.
The performance, we need to put it up and check in.
So it comes off a little bit, and that was on the back of those recent comments. Look, I don't know, I mean, central London property has been long viewed as one of the most attractive global assets because I understand the UK has had continuous protection of property rights for like 500 years. People have been able to be confident that if you own property in London, you wouldn't get expropriated. And that means people that come from countries like Russia and all sorts of other, third world type environments think, well, let me put my money in London property because at least there I can, be sure that it isn't going to get grabbed.
So it comes back to what I put out at the top of the discussion: location, location, location. You just cannot go wrong with where these assets are based.
Correct. This is probably the best asset class, or the best property rather, in this asset class regarding location. It was trading at a substantial premium to NAV. It's now trading at a slight discount. So you're getting good location at a good price. There is some concern regarding the residential market, stamp duty increases and the lack of sales at Lillie Square. But for me, given the quality of the portfolio, I like it a lot.
Hot. Paul, are you going hot?
Yeah, notwithstanding some of the noise about foreigners investing, there were these comments that David Cameron made off the cuff about countries like Afghanistan and Nigeria, and there was a bit of heat and so on. I think the trend of investing from the periphery into the center will continue, so I would say it's hot.
We're getting a double hot.